So let's perhaps look at one issue which might give some long-term support to the market. We heard some noises from the SEBI chairman that he is looking to perhaps give some incentives for the mutual fund industry. I don't know whether we can yet call them incentives, but the industry has been quite under the weather for quite some time now, partly because share prices have not helped, but partly because even the sales incentives after they were tweaked have not quite found enough support in the industry or with investors. Vivek Kudva, a veteran in this space and now of course with Franklin Templeton Investments, is joining us to discuss the fate of the industry. Mr. Kudva, thank you very much for joining us. Well, it's important that at least there were positive noises from the SEBI chairman. Let's start with what is hurting most. More than the taxes, what is hurting most is that sales incentives were withdrawn after the entry load was banned. Do you think that has to be reintroduced in some fashion, or has the industry learned to manage without it?
Well, I think the industry has been managing without it for 3 years. So it would be fair to say that the industry has learned to manage without it, but it has been difficult. I think the issue is that I think the entry load was abolished suddenly. If at all, you know, there was a desire to abolish it, I think it should have been done in a phased manner. But having abolished it, it is very difficult to reintroduce it because, you know, it'll have a backlash, and popular opinion is against its reintroduction. So I think there'll be a challenge to introduce the entry load.
Okay, well, that was actually going to be my next question, whether you are expecting anything on those lines. But then what would be the kind of succor the industry will want at all now?
Yeah, so I think there are 2 or 3 things. Firstly, I think, you know, some relief to the industry is being considered, and I understand that the SEBI board is going to meet later this month on some of that. I think what we've asked for is a slightly higher expense ratio. Okay. So I understand that there may be an increase in the expense ratio by 25 basis points. We've asked for fungibility of TER. We've said once a cap is put on the expense ratio, then let us use that expense ratio the way we want to. Let not there be any further restrictions in terms of management fees, etc., within the expense ratio. And the third point we've made is that service tax, you know, when these caps were set several years ago, there was no service tax. The principle everywhere is tax is borne by the end consumer, except in the case of mutual funds, where the service tax was also included as part of the TER. So the third issue that I think is being considered is taking service tax outside the expense ratio. And I think that's important because the service tax may change, it may increase going forward. So I think at one level, these will provide, I think, you know, some relief to the industry and to the distributors. But the bigger issue in my view is that long-term money is not coming into the industry. And when I mean long-term money, I'm not just talking about equity and debt investors investing for 2-3 years. The pension money and the insurance money does not come into the mutual fund industry, and that is very different from what happens elsewhere in the world.
Okay, so Mr. Kudva, just to put things into perspective, which proposals do you think could come in its current form in terms of recommendations, and how helpful do you think, which proposal according to you is possibly the most beneficial at this point in time, which would be the top priority for the mutual fund industry in terms of the proposals?
Right, so you know, again, I want to break it up into 2, what SEBI can do and what requires the intervention of the government, which some of, you know, if there's some tax benefits to be given, etc., then that has to be done by the government. It can't be done by SEBI. So in terms of what SEBI can do, the 3 things I mentioned: service tax outside, fungibility of TR, and increase of TR. And there's also some talk about increasing the TR in the smaller towns so that we can reach out to investors in the tier 2, tier 3 cities. So that's one, and I think that can happen fairly soon. Longer term, I think we should be allowed to manage pension and insurance assets. And the fact remains that globally, the lot of flows into mutual fund are driven by some tax benefits. So I think, for example, today, you can only, as far as your provident fund goes, you can only invest in the EPFO. why should not an investor have the choice of investing in NPS? And we are now going to be allowed to manage NPS money. So through that route, mandatory long-term savings will come into the industry, and the mutual funds then in turn invest in the debt and equity capital markets. And I think if the long-term money comes in, then you can have that money available for financing in India's infrastructure and investment requirements. So I think the mutual fund industry, let me not call it the mutual fund industry first, I like to call it the investment management industry. And so my basic request is, wherever there are pools of money to be managed, whether it's insurance assets, whether it's pension, allow us to participate in that management of those assets. It's a very simple request. Treat us as an investment management industry.
Okay, that said, have you noticed any improvement in investor appetite for mutual funds? Are you beginning to see SIPs, for instance, becoming a permanent part or an increasingly important part in financial planning?
There's no doubt SIPs are an integral part of financial planning, and they are very important. However, because of the risk aversion and volatility in the markets, people have generally switched off or pulled back a little bit from investing in equity funds, whether it is lump sum investments or even in some case systematic investment plans. So in terms of its importance, I think it's very, very important to ensure disciplined long-term saving. What's happening right now, I think there's been a little bit of pullback because of risk aversion.
What exactly is your view on the market then, Mr. Kudva? I mean, we've had a lot of disappointment which has recently come in from the ECB, but we've had that FII inflow which is keeping us, keeping our head above the water at least since July. Just give us a sense in terms of what are the triggers that we can watch out for.
Clearly, I think, from growth has slowed. Investments have slowed in India. And there are a variety of reasons for it. There is the global overhang. There's I think perceived policy issues. There are taxation issues. So there's a little bit of an uncertain economic environment. For long-term FII money to come in long-term, there needs to be some kind of clarity on the tax regime. So clearly, I think we need to watch out for that. And I think the Prime Minister and I'm sure the new Finance Minister will take steps to ensure that there is clarity and there is some stability. So people, if somebody comes in with a 3-year investment horizon and you change the rules in those 3 years, it doesn't work very well. So I think that should happen. And then I think, India still, I think growth has slowed down to 6%. But if you had 6% growth anywhere else in the world, I cover several countries, I travel to several countries, nobody else really has a 6%, or very few countries have a 6% growth rate. Is it adequate? The answer is no. I think to meet the aspirations of the people of this country, we need a growth rate of, in my view, at least between 8 to 10%. We're not going to have that right now, but I'd still bet on India for the long term.
All right, we'll leave it at that, Mr. Kudva. Thank you very much for joining us with your thoughts.
My pleasure.
Okay, so that's the sum and substance of what the industry wants. Service tax and other issues would be smaller issues, but the bigger thing is that the big pension money should also find its way, or at least tax incentives be given to get long-term savings into the industry. Let's take a break. On that note, earnings season in full swing. We will have Mr. A. Balyan, the CEO and Managing Director of Petronet,